And I know you partner with several assisted living communities to help clients convert their life insurance policies into long-term care benefit plans. Are there opportunities for those who are interested in home care?
Absolutely. We have been working with the assisted living and nursing home industry for almost 4 years now. I actually spent a portion of my career also working with the long-term care provider portion of the industry and got to know it very well. And we saw a clear need to bring private pay solutions to assisted living, to nursing homes, to home health care companies. Today, Life Care Funding Group works with a network of, right now it's 4,000 senior care facilities around the United States, assisted living communities, nursing homes, and now more and more home health care companies are starting to also work with us to educate the consumer and make available to them the option to convert their life insurance policy into a long-term care benefit plan that is then set up and administered on behalf of the family, with payments being made every month directly to the care provider, and whether that's an assisted living community, a nursing home, or a home health care company, any form of long-term care will qualify for the conversion and to be able to benefit from the monthly payment stream. And it's also important to note that life insurance policies are an unqualified asset for Medicaid eligibility. So when a senior is going down the path of long-term care and preparing themselves through what is known as a spend-down regimen to get ready for the eventuality of qualifying for Medicaid, if they have a life insurance policy, they have to get rid of it to qualify for Medicaid. So that's one of the big reasons why literally billions of dollars of life insurance policies are discarded every year. What state governments, what NCOIL, what the long-term care providers, companies like Emeritus Senior Living, Brookdale Senior Living, Sunrise Senior Living, some of the biggest healthcare companies in America have come to realize is we have a responsibility to inform consumers that if they have a life insurance policy, it's an asset they can use to help pay for long-term care. There's a quick and simple process they can access to do it, and then to put them in the direction of doing, in fact, just that.
Can you talk a little bit about the way that this bill has affected the way that insurers communicate with their clients?
Yeah, the Life Insurance Consumer Disclosure Model Law was passed by NCOIL in November of 2010. So it's less than a year ago it was passed. It has been introduced and passed in a handful of states. In another handful of states it's been introduced and it's under consideration. There are a number of more states that are yet to introduce it, but as they are starting to approach their 2012 legislative seasons, have been taking a very hard look at the growing use of life insurance policies to pay for long-term care, the Consumer Disclosure Model Law passed by NCOIL, and introducing it into their states. As that bill is introduced and passed, it boils down to a simple requirement that the life insurance companies have to disclose in writing to the policy owners in a state where the model law is passed that if they're going to lapse or surrender a policy, they have a series of options to consider, one of them being the conversion of the policy to a long-term care benefit. Also written into the model law is the responsibility of agents and advisors, that they also are going to need to communicate that information either through the carrier or directly to their customer. But if they know a policy is going to lapse or surrender in a state where the consumer disclosure law has been passed, they have the fiduciary and now legal responsibility to disclose a specific set of alternative options to lapse or surrender. And that's going to be a process that's going to, over the next year or two, as it works its way through legislative cycles, is going to grow across the country. Before you know it, there'll be a critical mass of states passing that, because they want to see the best possible use of an asset instead of it thrown away. If it can be used to help pay for long-term care in states where they're having significant budget crises around Medicaid and paying for long-term care, they look at it as a win-win-win scenario. It's a win for the consumer, it's a win for the long-term care providers, the providers of those services, and it's a win for the taxpayers in every state, because if you can delay somebody's entry onto Medicaid by having them use the full value of their life insurance policy instead, it's a very big win for the taxpayer.
And what feedback have you received from the insurers themselves?
Well, the insurance carriers actually are opposed to the consumer disclosure model law, and for good reason why, in their opinion, and that is by letting the consumer know that they have this variety of options available to them, instead of lapsing a policy, it's going to stay in force, and it's going to be used to help pay for the cost of long-term care. That means a policy that would have lapsed and the carrier never would have paid a death benefit on it, instead now is going to stay in force, and they're going to eventually pay the death benefit on it. That has an impact on their bottom line, and as we all know, a significant portion of the insurance industry's profitability every year is driven by policies lapsing or being surrendered for their cash value. Therefore, the carrier never needs to pay out the death benefit. So they're not happy about the consumer disclosure model law, but they have also had a very difficult time opposing it because it puts them in a very awkward position to say, we shouldn't tell consumers about their legal rights to use an asset they own for its best possible purposes because it's cutting into our profit margin. The argument that they did use, which was unsuccessful at the end-coil hearings where we testified together, they kind of boiled their argument down to, we shouldn't be telling the consumer too many things and confusing them with too many options. It's going to confuse the consumer, and we don't want to be doing that. When they said that, actually, it was I had never seen anything like this before. The hearing pretty much ended about 2 minutes later, and a unanimous passage vote happened, and that was it. The consumer disclosure law flew through and passed when that argument was put on the table, and it's just a real tough argument for them to make.
And where can agents and advisors go to learn more about the law?
Well, we have a lot of information on our website, www.lifecarefunding.com. We help with the drafting of the model law. It's posted on our website. We have a map of all the states and where they stand in terms of passage on our website. And in fact, I'm here hosting a session that will be tomorrow here at Senior Market Advisor Expo with the president of the National Conference of Insurance Legislators, the executive vice president of Emeritus Senior Living, the biggest assisted living company in the United States, and David Catane, who was one of the first producers selling long-term care insurance in the United States. He goes back 25 or something years in the business. We're going to be talking about the end-coil model law, its impact on the consumer, the political landscape. So between our website, this meeting, and information that will be coming out after this meeting, I think agents would be able to find a lot of very helpful information, and it would be in their best interest to make sure they're well informed about where it stands now and where it's going and the implications it has for their practice and for their customers.
And speaking of the future, where do you see the industry in the next 10 years?
You know, the life insurance industry, I'm going to break it into its components. The life insurance industry will continue to be a vibrant, important part of the economic infrastructure of the United States and of the world. Today, there is $10 trillion, trillion with a T, of in-force life insurance in the hands of 153 million Americans in the United States. That's the most recent NAIC numbers. Life insurance is a critical financial planning tool for families. I just can't imagine any family not having it. And it will continue to evolve, grow. It will be challenged to look to the consumer's best interest as opposed to its own from time to time. You know, it's a business. Many of the companies are for-profit, publicly traded, so they're looking to please their shareholders as well as their policyholders, and sometimes that's a hard tightrope to walk. But at the end of the day, I think the life insurance industry does the right thing and offers an incredibly valuable product and will continue to thrive in this country. Long-term care insurance, for the reasons we talked about, has some soul searching to do and needs to find its footing again. It's had a rough couple of years, and instead of the explosive growth it should have had over the last 10 years, it went the other way. Where is it going to go over the next 10 years? I'm not going to predict. But where it stands today, I can tell you no one would have predicted 10 years ago. And then for disability insurance, it's another critical product, primarily sold through the group marketplace. And I think that in troubled economic times, families will continue to see the benefit of when a disability insurance policy comes in to help with income replacement. So I think the overall health of the insurance industry, life, long-term care, and disability, is going to continue to be strong. Of the three, long-term care insurance is going to really work hard to find its footing and be in a better place 10 years from now than it is today. And we hope that it's going to do what it should be doing.
And is there anything else that you want to let advisors know while you're here at Senior Market Advisor?
Well, I would say that one thing, it's an announcement I'm pleased to make, and that is up till literally this week, Life Care Funding Group has never distributed its services through any kind of agent field force. Everything we've done to work with the consumer has been done, in essence, directly with the consumer and working in partnership with the long-term care companies, the providers of assisted living, skilled nursing home care, and home health care. We have just now opened up what we call the Assurance Benefit Program. It's the conversion to a long-term care benefit plan. We've opened up the Assurance Benefit to agents and advisors, and we have started actually granting territories to agents and advisors to work with Life Care Funding Group in a co-branded environment to offer that product in their communities, to their customers, and actively engage with us in our effort to educate the consumer, work with the political leaders of this country to help consumers get the best possible use of their life insurance policies to help pay for long-term care. And I would say stay tuned over the coming weeks and next couple of months as official announcements start to pour out and word starts to spread as we've brought on the initial group of agents and advisors that have started working with us.